Welcome everyone to today's webinar. What can you do? The personal economic impact of COVID-19 with Michael Micheletti. My name is Julie Hudak and I am with the University of Minnesota Alumni Association. Today's webinar is made possible by the Alumni Association members and donors that make initiatives like the Alumni Webinar Series possible. If you're interested in learning more about the Alumni Association, please visit us at umnalumni.org/membership. Beyond today's presentation, we have additional webinars that are scheduled. Please check back for more. Several of them include tomorrow's, on April 29th, Exploring Gen Z, the Future of Work with Frances Huntley and Emily Fitzsimmons on April 30th. Additionally, Managing Change and Stress in Unpredictable Time with Dr. Carolyn Moores, hosted by the College of Continuing and Professional Studies. To learn more or register for other events, please go to umnalumni.org/virtual. Just a little tutorial on how to use Zoom today if you haven't been on, which I think most of the world has. You may listen via your phone option by dialing 646-558-8658, and when prompted, putting in the webinar ID 925-0721-0776. One-click dial options appear in the confirmation email you would have received. If you have any other questions, you're welcome to present those in the Q&A offered on the screen. And now it is my great joy to get to introduce Mike Micheletti. He is the Director of Strategic Communications at Freedom Financial Network. Michael serves as the Director of Strategic Communications at Freedom Financial Network, where he is responsible for the communications planning, knowledge dissemination, and educational outreach to key consumer audiences. Before joining Freedom Financial Network, he held a variety of high-profile communication and consumer education roles, focusing on healthcare, tax, insurance, and housing. He is a former reporter for Fox News, that's my channel, Fox 9, CNN, and served as news director for iHeartRadio, San Francisco. And now I would like to welcome Michael. And let me stop share. And Michael, you can take it over.
Thank you very much, Julie. Thank you everybody for having me here today during these challenging times. Let me share my screen so we can get into this presentation. All right, and hopefully everybody can see my screen at this point. So thank you, Julie. Thank you, everybody. This is one of the good parts of doing my job is to do consumer education, public affairs work, and getting good information into people's hands during these challenging times, both at the healthcare level as well as the personal economic level. So today, some good stuff for us to talk about and how to prepare for a possible recession. How do we think about COVID-19? How do we think our own personal economies and how we look at this not only at the national level, but perhaps at the international level as well. So I think what we're really looking at right now is, for at least during most of people's history, is how a pandemic is impacting not only the healthcare sector in the United States and worldwide, but also how it's impacting the economic sector, especially when it comes to employment. And we're going to get into this quite a bit here this morning or this afternoon for some of you. And I think, some of the top line media items has always revolved around here over the last month anyway, about the amount of unemployment and how we think about unemployment. And when you see some of the staggering numbers, we're roughly around 27 million workers filing for unemployment here over the last month or so. What we're seeing now has not really ever occurred. It's unprecedented. We keep hearing those words. So today what we'll focus on is really what the macro view and how we can take that macro view and apply it to our own personal economies. So we'll take a look at what the federal stimulus package means for you, both on the stimulus check that you may have received already, but also on the small business side of the world, as well as how we can think about this economic crisis that has been triggered by a pandemic and how we need to move forward during this upcoming recession. So I think from a macro view, really the key question is that everyone asks me, that we hear all the time, is how quickly is the economy going to rebound? And we will dig into that in great detail. The second part is how can we personally and at the household level, how can we weather this economic storm? So I will provide some just quick tips, some conversations, some starting points for I think is a good way for us to all prepare as we move through this crisis. And finally, with the small business and the PPP, small businesses drive a key sectors around the country. The PPP was topped off starting yesterday. Will those funds be enough to keep America moving forward? And we will get into that in great detail. So first and foremost, COVID-19 is a public health crisis. We can't just talk about the economy part of this, is that the health component to this is very important, right? And so as long as this continues to exist, and as we see states, municipalities try to open for business and move forward, we will continue to see substantial economic effects, both at the local, municipal, and national levels. To get a better understanding of what's really going on with the American household, we conduct regular research at Freedom Financial Network. And before this started in January, we actually conducted research about the state of the American household. So the top line and something that we always ask is, can you handle an unexpected expense? And we tie a $500 number to that. And you probably have seen numbers like this what the Fed puts out at $400 and a few other folks. But this number has been going up year over year. Now, laying on the pandemic, COVID-19, we've started to ask bi-weekly questions around forbearance, around stimulus check, things around the economy, things that we have to do to move forward at the household level. And some striking numbers here. 50% of the population is using a hardship program already, a forbearance program. And just to give a little clarity on what this means is that creditors, lenders from your mortgage, from student loans, from auto to your credit cards, personal loans, they will offer hardship programs during this time. And we're going to get into this a little bit later on today about how to leverage these as you try to navigate this crisis. Well, already 50% roughly of the population is already using one or more forbearance or hardship programs already offered by lenders and creditors. This will help people weather this storm. If you don't have to pay your student loans, and we know what's going on with that there's really basically a 6 month, you don't have to pay your federal student loans back until September, the end of September. How much financial flexibility can that give somebody at the household level? Well, if you look at all of your debts that you owe, if you can leverage those forbearance or hardship programs, how much financial flexibility can that give you to pay for the necessities, the roof over your head, food, shelter, etc. The other thing that we were tracking was the stimulus check. So when we got wind of this payment possibly being distributed to the American population, we asked, did we think that this was going to be enough? And at the time, we thought it was going to be $1,000. Ended up being $1,200, but still, right now, back in March when we asked the question, 31% believed that it wasn't going to be enough. That number basically has doubled in the month since we've asked those series of questions at 65%. What this is telling us is that there is an economic strain at the household level for necessities, and that stimulus funds will need to be replenished at some time very soon to make sure that people can get through this economic crisis. And finally, the selling of assets, stocks, bonds, perhaps tapping equity in a home to make ends meet over the next 3, 4, 5, 6 months. We are also seeing this particular number tick up as well. Once again, just indicating the economic stress that the everyday American households are going through right now. When we asked specific and relevant questions around things that one would have in an everyday household, feeding yourself, making payments on time, making those rent or mortgage payments, you can see just how much of a stress indicator most people are under right now. The concern about feeding one's family obviously is very eye-opening to me. I've never seen these numbers be this high before, in almost 20 years of doing this. So these kind of numbers at the rate and the percentages is very concerning to see how we are not only existing today, but how we're going to have to come out of this and how these numbers will tick up over time. So unemployment. So I'm going to spend a little bit of time on this because I think this is really important, because you see some of the dramatic numbers splashed on TV across, the front pages of your online publications. But let's put this into context of really what's going on. So unemployment was near low basically a month ago. And in a month, we're seeing basically double-digit unemployment across the country. Now, it's very important to put this into geo-specific context as well. Where is this unemployment taking place? Who is impacted by this? So the initial month or so of this, we are seeing a disproportionate amount of folks that are hourly workers that are impacted by the work reductions brought on by COVID-19. Typically, when we talk about sort of retail workers, hourly workers, this is the most vulnerable part of our population. They have less access to healthcare. They have less access to services that would allow them to weather an economic crisis like this. So the vast number in a short period of time is extremely concerning. Unemployment will likely continue over the next 6 months and go probably into 2021. And more importantly, how are we going to handle this from an inflation scenario, right? How are products going to be priced appropriately, knowing that the supply, all of us working, is going to impact this down the road? So Julie's going to put up some other materials in chat around this, so you guys can go in deeper on this. From the Congressional Business Office, they're the ones that I trust to have relevant numbers and how we need to frame this for our own personal look back. So when I think about unemployment, obviously what's near and dear for us is, hey, I'm working or I'm not working. But there's also the spider web effect of this as well, is that if 27 million people are not working, that impacts supply. So in an economic sense, supply is being withdrawn because of government interaction due to the virus. This is something that we really have not seen, well, since probably the late 70s, early 80s, when we had an energy crisis. Oftentimes you'll hear comparisons to the financial crisis of a little bit more than a decade ago now. What's happening now in unemployment in relation to that is completely different. We're seeing work supply constrained by a virus, by COVID-19 and government interaction. So it's a different situation for us in how we measure the true impact of unemployment today. So the state of the economy, I think most of us that have been paying attention to the news realize that we're probably in a recession, although not true by the definition, but most likely by the end of Q2 that we will be in a recession by the end of the second quarter. But let's talk about what we need to get out of it. And I think that's the more important part of this discussion today, is how quickly will the economy reopen safely? How quickly will businesses rehire in relation to how quickly they laid people off? So during the last financial crisis that we had, and if you look back in time, basically it took almost a decade for employment rates to get to where we were at basically a month ago. That's probably not going to be acceptable for the economy to grow at the rate that we want it to. So small businesses will probably be the primary driver to rehire quickly. And this is why when we talk about the SBA and the PPP a little bit down the road here in this presentation, why funding small businesses will be very, very important to getting us back on our feet again. From a consumer level and from a household impact, what are we going to see? Debt burdens will rise. Debt portfolios are going to change fundamentally, just like they changed fundamentally a decade ago. And what we're going to see is that households that had cash constraints or were on the edge just before the pandemic showed up, is we're going to see how households react to this particular event. And so I'm going to stop and talk a little bit about debt portfolios. Coming out of the crisis a decade ago, the debt portfolio changed for everyday Americans. Primarily back then, mortgages were the primary driver of that crash, followed very closely by credit card debt. Today, while mortgage is still the primary driver of debt in America, student loans, followed closely by auto loans, are now the second and third layers of debt in the debt portfolio. And then finally, credit cards. We had a switch, essentially. 44 million Americans have student loan debt, average of around $32,000. And we're also seeing auto loans take on a greater portion of the personal debt portfolio as the prices of cars have gone up over the past decade, as well as an extension of how auto loans are administered now. Typically, a decade ago, you would have gotten an auto loan in between a 3 and 5 year window. Now we see auto loans regularly distributed at a 5 to 7 year window. Additional debt burdens to take on the additional debt because car prices are a little bit higher. So as we go through this crisis, what are we going to see with the debt portfolio? Will we see an increase in credit card debt? And some of the outside research that we've done in terms of how people are leveraging credit cards during this crisis will indicate or seem to indicate that they are putting everyday expenses like groceries, utilities, your lights, those types of things, internet, on their credit cards, and they do not have the ability to pay it off. Now, while certainly they are using credit during a time of crisis, and there are hardship programs to help them during this time right now, what we're concerned about is how this is going to look like in 4 to 6 months from now when the hardship programs terminate. And will we see a fundamental change to how the debt portfolio in America looks like? Will we see mortgage still being number one, but will we see a massive increase in credit card utilization and credit card debt in 4 to 6 months from now? And finally, the shock to the system that I kind of talked about on the unemployment side a few slides back is supply is how we measure ourselves as an economy. It's what we collectively produce. So 10 years ago, we saw a shock to the system. It was an economic collapse tied to just the mortgage. Right now, the supply is constrained is our ability to collectively produce because we can't work effectively because of the virus and because of government restrictions, movement restrictions, shelters in place, et cetera. So what we're seeing on the stock markets, what you're seeing across the entire ecosystem is what economists would call a demand shock. Supply has been constrained because of these outside forces, and this creates that demand shock and basically limits our ability to move forward. So how do we move forward? Well, you're seeing this in some states around the country. Texas, Georgia's opened up here in recent days. We're going to see states start to open up, and we are all collectively kind of looking to see how these states react both on the economic level, but also on the healthcare side. Are we going to see a second wave similar to what we saw in Japan when perhaps they opened up a little bit too early? So a lot of this will be a wait and see system as certain states open up, but how do we evaluate and how do we take those learnings moving forward as we go into the summertime? Let's talk a little bit about the deadly R word, recession. So according to Harvard, 2 out of 3 people are not prepared for the next economic recession. So I would say that we are in a recession. I'm sure the Fed will tell us that in a couple of months. But for the purposes of this discussion today, let's go on the premise that we are in an economic recession. So that number is not good. I think everyone probably is shaking their heads going, am I prepared for a recession? How do I prepare for a recession? So let's talk a little bit about that right now. So there are a lot of tips out there. You probably have seen them from, your variety of news sources, folks that you follow on social media. But I'm going to drill it down into 6 key areas for us today. And we're going to start with debt. Prioritize the debt that you have today, but don't risk the roof over your head. So when you look through your budget, and we're going to talk about the budget in a minute, debt should not come at the expense of what you have, meaning your roof over your head. Because you live there. This is your house. This is your home. This is where your family lives. The debts will get paid in time, but the house that you have, as we all probably agree, there's very little you can do if you lose your house or you lose access to that shelter. The second thing that we're going to talk about is money talk, organic raw money talk. This is something that is that in the US, we have a hard time organically talking about money. It's something that typically we hold very close to the vest. It's something that maybe we only talk about within the household. We don't go to our friends. We don't go to our family. We don't talk about money and the hardships that we have around that. This is an opportunity to perhaps change that behavior a little bit, because we're all going to have to come together to figure out what is the best way to weather this crisis, because there is no ultimate playbook for this. There are only best practices that you can test and iterate on to get better as we move through this. So talking about this, talking about what's working for you, talking about what's not working for you, how are you navigating this crisis with your friends and your family is really important. This is sort of this hive mind mentality, so we can all have learnings, and then we can also come out of this crisis smarter and better off and more educated around how we deal with our money. Hardship program. So sort of touched on this earlier, but this is something I think every single one of us should be looking at, even if you have a job right now and you have income coming in right now, is that these hardship programs are designed at the creditor and lender level to provide a little bit of financial flexibility for us right now. And from your mortgage, if you have a conforming product, meaning something from one of the GSEs, Fannie, Freddie, there are specific rules and regulations that a lender has to give you forbearance or hardship or some sort of relief during this time. And let's talk a little bit about that, because this can oftentimes be confusing for people. You may have went to Bank of America, you got a loan through Bank of America, but they no longer service that debt. They never service that loan any longer for you, and they've sold it off. So you have to go to the person that's servicing your loan right now to get that information to enter into their hardship program. So even if you're not in a hardship right now, starting the process of getting all of the contact information, understanding who your lenders and creditors are, while you have the frame of mind to do it, is important. Don't wait for the hardship to actually happen. Start that process now. And a lot of the lenders, a lot of the creditors right now, they are working really hard to make this as easy as possible for us, the consumer, to go online, go to their website, to apply for these hardship programs. Now, there's also the opportunity to go and make a phone call. Just what we're hearing is oftentimes a lot of the big lenders, a lot of the big creditors, they have extensively long wait times, 4, 5, 6 hours. So once again, understanding how that dynamic works before you enter this sort of hardship period would be beneficial to you. So find out who your creditor and lenders are, start the process, start writing down what the contact information is. So if and when you do enter that hardship period, you are fully prepared. Your money is not your value. This is something that I talk about all the time when I do talks like this, is that oftentimes a credit score, the amount of money that you have in the bank, is how we value ourselves. This is not the right time to evaluate that in this middle of a crisis, right? Credit scores may go down. You may see a reduction in your credit lines as lenders try to mitigate their risk. This isn't a reflection on us. This does not provide any sort of open-mindedness for you to go, my credit score is going down, or I'm limiting my credit, or I don't have access to things that I normally would have had. These are uncharted territories for both us, the consumer, as well as the lender. So don't place value for yourself on the amount of money or what your credit score is, anything that you typically would during this time. It's just going to create extra anxiety, stress for you, because it's always top of mind. So try to give yourself a little bit of breathing room. Scams. Unfortunately, during almost everything that I have ever covered in my career, when there is a national disaster, a disaster of any kind, the scammers come out. And we're seeing this at a scale probably never seen in history before, unfortunately. And there are a couple things that I would love just to offer as advice for the group today is obviously take care of yourself. For me, I know how to take care of my family, but the scams typically are going to go after the more vulnerable parts of the population, your parents, folks that perhaps have limited access to banking and these types of things where they're actually having to get a paper check and they're having to go in and cash it somewhere. And these scams are very good. They're well set up and they're designed to get access to your funds, to get access to your personal information, your PII. So if it sounds good to be true, it probably is. And just be very aware right now about scams because it's only going to increase as we go through this very challenging time. And finally, the budget. So some people like to write it out. Some people like to use a spreadsheet. Some people like to use tools like Clarity or Mint or some of the apps that are out there. Whatever way you want to choose to do this, start to do this right now. If you do not have a monthly or yearly budget, start the process. And we're going to get into the budget here in the next slide. But for us right now, doing a yearly budget is a fool's errand because we don't know what's going to happen by the end of the year, much less by the end of the month. So recommending a yearly budget probably is not in the best cards for us right now, but more along the lines of a monthly or even a daily budget to manage this time is the best way to approach this. So when it comes to the budget during a crisis like this, as we're trying to prepare for a recession, there's a couple things we need to do. Test and iterate, right? If you're doing this for the very first time, or heck, maybe even if you've done this for a very long time, is your budgeting model and how you attack your household cash flow and your debt burdens and your monthly expenses, is that the right way to do it based off of the criteria that's been set up today? Meaning we're in a recession, we have significant challenges at the financial level. So how do you get through the next few months or even the next few days is the best way to approach this right now. Look at what you're spending at the daily level, look at what you're spending at the weekly level, and then iterate out to the monthly level. Like I said earlier, don't try to do this at the yearly level right now. It is just going to be, you're going to be running into a brick wall about trying to understand what's going to happen a month from now, much less a year from now. Tracking. So there's a lot of great tools out there, but I would focus on some key areas for us right now is what are the necessities and define those necessities critically in your budget. Food, lights, electricity, these kind of things. What do you absolutely need? And for some people, the absolutely need would have been in this right column, the cuts, right? Gyms are probably closed where you live right now. Barber shops, these kind of things also probably closed, but they could reopen. Do you absolutely need it right now? And evaluate and be very, very critical about every line item in that budget as you start to iterate and how you think about the next days, weeks, and months as you go through and navigate this economic crisis. Let's get into the federal government Paycheck Protection Program, PPP, and that's usually how I call it the PPP, but this was created to help small business owners. So 99% of Americans or America is driven through small businesses. Just let that sink in for a second, right? So while a lot of the time you see your major corporations get all the headlines and that's where the talk resides on Wall Street, is that the backbone of America and the economy is facilitated through small business. So to be frank with this group, when I saw the initial amount that came through in the first wave, the first thought that came into my mind was that's not going to be enough, not even close. And so what we're seeing now is the replenishment of the PPP starting yesterday. Unfortunately, it's been kind of a messy integration. And for those of you that may be on this call that have tried to apply or had to go through this process, you probably are raising your hand saying, yes, it wasn't easy, or I wasn't eligible, or I got declined. Yesterday's sort of wave 2 of this was problematic from a variety of ways, from a lockout scenario, slowdown, crashes. And this just lends to this issue of our infrastructure when it comes to some of financial services is broken, that we couldn't iterate on this in a 2 to 3 week period to be able to deliver these funds quickly, efficiently to small business owners during a time of massive and unprecedented need. So just to go through the PPP, if you're not familiar with it, I'll do a high level of this, is that these are low interest loans with the caveat that you don't have to basically pay them back if the funds are sunk into your payroll costs, or key benefits like healthcare. You can also use those funds to pay for key items like rent or your mortgage or utilities as well. The forgiveness component of this is really, really important for small business owners. And the definition at the Fed level of small business is for folks that are small businesses that have 500 or fewer employees. So that's also something to consider here as well. This is a combination of, some tech startups all the way down to the mom and pop, grocery store that's in your neighborhood. So I think it's important how we frame that is, it can be a business or a typical mom and pop as well. So there are some things for us to consider as we go through this sort of second wave, is because the major lenders were tasked with distributing these funds the first time, the Fed has decided to open up that portfolio a little bit. So there's more opportunity for folks to get to their community banks, federally chartered banks, state chartered banks, et cetera, to get access and perhaps get into line a little bit more faster and effectively than working with one of the bigger lenders that are out there. The extra $300 billion will replenish this, right? So that brings us around to say $650 billion in total. Our key contacts in DC are telling us that most likely this is the end of that particular replenishment. We're not going to see any more additional funds pumped into small businesses. While that's disappointing to me, we will see how this second iteration goes through and see if the money actually gets into the hand of the people that actually need it. And then that may trigger a third wave, but from what we're hearing from our government relations teams, that most likely this is the end of the stimulus when it comes to small business owners. And like I said, we're looking at an extension of credit unions, more community banks, these types of things. So you have a greater opportunity if you are a small business owner to get access to those funds. And in fact, I probably would recommend using your community banks, your federally or state charter banks, because there's going to be less of a wait. They most likely will manually push your application through, and they will have less applications to process. So look at those options as if you're looking for some relief from the SBA. And finally, this one key component, I think, that wasn't in the original SBA was allowing agricultural enterprises to get access to these funds. So this is sort of a twin-fold distribution through EDL, the Economic Injury Disaster Loan. This should provide some greater flexibility for key areas in agriculture that wasn't available in the first turn through the SBA. And that concludes the presentation. Thank you for listening.
Okay, Michael, if we have a few questions that have come in.
Only a few, okay.
Yes. So one was asking about just encouraging people to, this person has said they're an economist, has been unemployed, and just wanted to emphasize that it's very important to remain productive and keep learning if you are furloughed or laid off, and saying it's vitally important to keep your skills fresh and new ones, keep in touch with your network and meet new people when possible.
Yeah, I think that's a great point, is what I would always define as self-worth, right? Is during this time, there's opportunity to increase your self-worth. And you can also apply that as well to, even if you're working right now, right? Make sure managers, key influencers within your work structure understand your worth to the organization, right? So positivity, and use this opportunity to learn more, to expand the skill set that you have, right? If you're in communications, it's me. I'll just use me as an example. What would I do if I was laid off tomorrow? I would probably look at ways for me to be better in social media, to look beyond the typical and traditional ways that a corporate communications role would be defined. What would I do better? More social, more understanding of data and research to get better within that framework. Yep, great point.
Thank you. The next one has a great question. It said, how should I deal with monthly payments on annual passes for activities that won't be happening this year? Examples being an amusement park, the theater. Nothing has been sent to those organizations about what is happening with our annual passes in light of services being closed.
So if you've already been charged for the annual pass, I would make a couple phone calls and emails and say, listen, you're not making good on your amusement park being open, these kind of things. Can I get a little relief, at least at the monthly level? You're probably not going to get the full refund back on that, but I've seen instances of a number of amusement parks or movie passes, these types of things, where people have been given relief. We're seeing this actually with auto insurance as well, where people are getting relief. They may have prepaid. We're not driving. There's been a reduction in accidents. So reach out, be proactive. We go back to, I don't remember what slide that was, but start that process now. If you haven't been charged, I would cancel it right away, right? You don't want to have to go through the process of going to your credit card company or having, to make that phone call after the fact. If you know that is coming up, if an amusement park, museum pass, movie pass, whatever that is, cancel it now.
All right, great, thank you. We have another one. They say, will the PPP work for a church?
The PPP, will it work for a church?
So that's right.
My initial reaction, I have not seen any guidance about those types of organizations. I will, I will take that question and I will get a firm answer from my government relations folks. I don't want to say something wrong. So can we get that contact information, and I will get a definitive answer for that person?
Yes, we will. All right. One of the other early questions was, what do you see the effect on the real estate market? The person submitting the questions was Minnesota-based, said that we're not really seeing an impact here yet, but what do you see more in a global impact, if any?
So two things to think about on the real estate side, and this is something that I've done for a very long time, so I've got some opinions on it. I don't think we're going to see, it'll be flat for the foreseeable future, meaning inventory will remain flat in the areas that we will see flat during this time. It's April 28th today, right? So home buying season doesn't typically start for another 3 or 4 weeks as we go into the late spring, early summer. In terms of, and maybe she wasn't, what she's probably getting at is, are we going to see a reduction in home prices? Is probably what he or she is getting at. The answer is no. I think we'll see flat numbers. And the reason for that is the interest rates in the housing sector are in the 3s right now. That does not lend to an area for home prices to depreciate, to go down in value. That will prop it up. It will prop it up at a flat level. And then you're going to look at key markets around the country that are the typical MSAs that will continue to have real estate fly off the shelves. The Bostons, the San Franciscos, those places will continue to do that, because people that have cash on hand, they're going to see this as an opportunity where they're not having 12 people to bid for. It's 3, 4, 5, and they have a better opportunity to purchase a home. At the global level, you're going to see a drag down in certain countries, I would believe, because of how loans are structured in other countries, right? So there is no such thing as a 30-year mortgage in most of the world. Most of the time it's capped at 15, so that changes the dynamic quite a bit, right? I'm going to use air quotes, the free money that we're getting on a 30-year mortgage here will lend to more of a flat environment. In other areas of the world, because of how real estate and how loans are administered, changes that dynamic dramatically.
All right, wonderful. Similarly, what is your view of the stock market in 3, 12 months, 2 to 5 years?
Oh, you're asking me to do FA stuff. I can't answer those questions. I'm not a registered financial advisor. I can't answer that.
All right, thank you. Just thought I'd clarify that.
Into trouble.
One more says, I work many jobs, both W-2 and 1099. All of them are part-time. I am getting unemployment. Can I apply for PPP?
Say that one more time. He's unemployed.
Question comes in, I work many jobs. They are both W-2 style jobs and 1099 contractor jobs.
Yeah.
All of them are part-time. This person is getting unemployment, but wants to know if they should also apply for a PPP.
If they have a small business, yes, absolutely.
Right, because it's really small business specific.
Yeah.
Thank you. We have lots of questions coming in. I own my own business. It's an S Corp, but however, I am the only service provider under the business at this time. Can I qualify for any of these programs? And if so, in what ways could this help? What types of expenses could this help with?
So for that person, so typically it's tied to healthcare costs and other things, but under he could qualify because the rent, the utilities, if he has overhead, if he has house, whatever that is, it could be tied to that. But would it be forgiven? That is something we would have to look at. It would be a unique situation that way. You have to look at whether or not it's a 1% loan, right? If you have to pay it back versus being forgiven.
Okay. This person says, I work in healthcare and want to scream sometimes, especially at irrational patients that are rude and verbally abusive. Usually can handle it, but now it's hard. And just saying, help me. So I'm not sure if we really have an answer for that.
Well, I think we all can applaud our healthcare workers. Even though, and Julie, you and I talked about this yesterday, and where the state of the healthcare industry is in the United States right now. And this is something, the healthcare industry is a $3.6 trillion industry in the US. It's roughly 18% of the economy, and it's on a bubble. And we didn't talk about this in this presentation today, but I think our healthcare worker may have brought this up. And yes, I do want to screen sometimes too when I see behaviors, how things are administered, layoffs within healthcare right now, and furloughs within healthcare because elective surgeries is basically put on hold for a majority of the country, right? That is a bubble for all of us to sort of keep our eye on, right? It's 18% of the economy, and most of that has been driven by debt, unfortunately, right? And so historically, healthcare would want to be one of those kind of areas of, hey, what should I get in? Somebody came to me, hey, Michael, what should I get into? What job should I get into healthcare? But the ramp up in debt and this pandemic is exposing significant flaws within the industry itself, which could be problematic, and we could see a bubble burst in the near future on that.
Thank you for addressing that.
Yeah. Stay
Again,
safe. Whoever asked that question, you stay safe.
Yeah. Thank you for all you're doing.
Yeah.
This one, I'm not sure if you can answer. What is your biggest concern right now, the economy or the virus? I understand it is a political question, but just thought I'd ask.
No, I think I can answer that without it being political. I think my first and foremost is the virus, right? There is still so much unknown. For the economy, there's ways for us to understand and model and move forward. Um, with the virus and how it impacts people at the healthcare level, there's still unknowns. I mean, just yesterday, the CDC added 6 new ways to look at it, right? Where it's like, we used to be shortness of breath and a couple of other high fever and these kind of things. They added 6 other attributes for us to be on the lookout for. Well, we're still in the infancy, really, of the virus. So that is more concerning to me because of what it could do downstream, right? If we look at what happened in Japan about 3 weeks ago, they opened up for business, so to speak, in one island in the northern part of that country, and then they had to close everything down again because of the virus. So I think, to me, if I had to power rank it right now, more virus, many unknowns there. As we go into the summertime, as opposed to the economy is, okay, we can float people money, we can do things at the national level to help as best we can. But when people get sick, the options are extremely limited. And that wasn't even political.
It wasn't. The next one is, I am a sole proprietor LLC, consulting business that has been significantly impacted by COVID. Who hasn't?
Yeah.
Is my ability to get funds through the PPP based on my tenacity or keep trying or other qualifying considerations?
So it sounds like somebody's had one of the messy trying to get into the system and whatnot. Tenacity and finding the right lender is the best advice I can give you right now, is because they opened up a lot of the community banks, figure out who doesn't have the line, who's willing to take your phone call, who's willing to allow you to go through the process with them. I would stay away from some of the big lenders right now. I won't name any names, but try to use the folks that are in your community right now.
All right, thank you. This person just wants to say, great points on the importance of small businesses to our economy. There are many alumni-owned small businesses. Can you give some additional guidance and advice to those small business owners who are adapting to the current situation?
Don't try to do too much. So I think this is a business vision, business strategy right now. Is I've seen a lot of, like, the bigger corporations, they've decided to reimagine their business. So I'm going to make masks and face shield and try to help out, right? For small business owners, it's not possible, right? We have very limited guardrails that we work in, right? If you're a mom and pop grocery store, that's what you're going to do. So how do you evolve during this time? Things that you would have maybe looked at as, hey, I get walk-in orders, or people walk into my small supermarket to grab their bottle of wine and some meat and whatever they're going to do. How do I better market? How do I effectively use virtual tools to market my business, market my brand? I think that's the time, right? How do you evolve the process from the way you used to do things to how you need to exist now? I think the new normal, and we hear that all the time, is this is the evolution. We're going to see it through all the way through from schooling, right? How people learn from kindergarten all the way through college, to how we shop, how we eat, how we attend events. So you have to find that niche, find the nascent part of the category that you're in as a small business owner. And then how do you actively market? How do you actively grow by coming up with creative ideas that you started the business in the first place?
Thank you. Back to real estate. If you own several properties, condo, lake home, etc., and don't need the cash, are you best to sit tight and list with a realtor post COVID-19 recession?
So they're empty units I'm taking. There's no rental.
Don't say. Must be. So they must be talking about if this is rental property, possibly. I don't know.
They're empty units. I mean, that's a math question. You know, what was your ROI on that? What's the return on investment that you were looking for, and can you facilitate that right now? Kind of going back to, I think we had a real estate question. It was like, it's going to be flat for the foreseeable future. I don't see a pop in any. I mean, Midwest markets typically are flat 1-ish, 2-ish% year over year. If you're going to get that and if you don't need the cash, you could sit on it, sure. But if you need the cash, I don't see or envision a time where you're going to see double-digit appreciation like we did, 4, 5, 6 years ago.
Okay.
In the short, let me caveat that, in the short term. In the short term, I would define by end of this year.
This is a person who has a second question to her first. Add on to the original question about business. If I end up having to hire other consultants, service providers, can this help with the expense of this in order to keep the business providing the services while the company income is dropping during this time?
So by definition, I think I'm getting the root of her question is like, if she hires somebody and she uses a PPP loan, then the loan would be forgiven. So yes, it'd be helpful to both her and the people that she's hiring.
Right. All right. Next one is, what do you recommend if you are an older worker? I am self-employed, 61, and would like to continue working for 5 more years. Any thoughts about how to turn this into an opportunity for me?
Well, that's a really great question. Did she say she's unemployed, employed again?
Doesn't, self-employed.
Self-employed. Does she
Self-employed.
Self-employed, what she does?
Doesn't say.
Okay, come back, give me what you're doing, and I'll give you hopefully a little magic on that one.
All right.
And I need a little bit of context.
Next one is, has unemployment been increased beyond 26 weeks? And do you think the $600 payment will increase beyond July 31st?
Really great question. This is my best educated guess on what information we're getting from our folks here at Freedom Financial Network is that would get extended. Is the $600 extension, that little bit of extra wiggle room, enough? I would say it's enough based off of where you live. If you told me, hey, Michael, $600 extra in San Francisco is not going to do me any good. Honestly, like, it's just, the cost of living here is astronomical. I think everybody knows that. But if you're in, Arizona, maybe Las Vegas, parts of the Midwest, yeah, I think $600 goes a long way as opposed to, on the coast specifically.
Great.
Get all there was a three-parter? Did I get the third part?
Yep, that one was just that part.
Just that part. Okay.
Yep. So the one.
So yeah, I would say, yeah, he or she asked was, will we see an extension of the unemployment benefits? I think if what the model suggests is true, where we're going to see probably another 3 to 4 million Thursday. And if that cadence keeps up as we start to dip into the salaried workers, right? We're going to go from hourly workers, which is about 80 million people, which is a massive number. And we start to dip into the salaried workers, that's going to change the dynamic dramatically. Because you go typically, like 80 million, you're going to add another 30, 40 million. It's going to change the dynamic dramatically. So yes, I would probably envision one extension to get us in the political cycle. There's my one political.
There you go. This one is a different angle. Should I use my 401k to pay my bills?
So under normal circumstances, I would tell you no. It depends on the bill and if you've taken advantage of everything in front of that first, right? Have you exhausted all of the other resources for hardship, forbearance, payment protection, the other things in front of that, where you're you have to pay, like maybe you have I don't know, a medical bill or something that needs to get paid to render service on. Typically I would say no, use the other forbearance hardship programs that the lenders and creditors are offering you today. Give yourself the financial flexibility, that little bit of wiggle room so you can pay those other key elements. But if you must, and that's your only nest egg, remember that if that's your last asset that you have to be able to tap, guard it as best you can. Last resort.
Okay. This one is asking about if they have, what about those of us who are renters in our homes. How do we
Mhm.
address and prepare for addressing when in hardship?
Great question. And there is a lot of renter relief out there, but you have to find it. It's not, unlike student loans, which is the only proactive sort of outreach that we had for consumers, where the Fed said, you don't have to pay your student loans for 6 months, automatic across the board. Everything else is self-serve. We have to make a phone call. You have to go online. You have to interact with that particular landlord, creditor, whatever that is. But there is renter relief. It is not, I haven't seen a lot of coverage around it. I haven't seen education around it. But I just wrapped up a project where I looked in depth at the state of Arizona, and there's a lot of renter relief in Arizona, some in California, and a couple of other states that I started to look into this on. So my initial take on this is look to see what the municipality is doing. Is there a moratorium on evictions, these kind of things? Look at that first. Second, if they do offer renter relief, do you have to pay that back in a lump sum at the end of the relief period? Got to look at that, because there's no uniform code on this. So the relief is probably there, but what the payment structure and what it looks like, be very critical of it.
Okay. This person is asking, I heard that the PPP you have to employ the same amount of people as the loan was approved for. Example, applied for 6 people, have to hire back 6 people to be forgiven. Is this true?
I'm going to go in and take a look. They tweaked some of the language on the second version of this to make allowances. I believe they put in a percentage. I'll grab that person's contact information. We'll get the absolute percentage number back to them.
Okay. Thank you, Janet. Here's an ominous one.
Really good question, because there's been some changes from version 1 to version 2.
So on a much more macro level, what is the future of malls and strip malls?
I'll probably take even a higher macro on that. Is what is going to be the state of mass gatherings, right? And I think this goes back, somebody asked the question, what's more worrisome to me? Was it the health virus versus the economy? I think I was having a conversation about sporting events earlier this morning before this call about what that state looks like. And I think any mass gatherings, until they understand virus impact, all those mass gatherings are going to be impacted. It just, the liability, legal, and then the health too on this, there's just so many unknowns. So strip malls, mass gatherings, events, concert, these kind of things. I would expect to see, baseball being played behind closed doors, football down the road, other sports until we get a full handle on what the impact is on the health, not only just in the mortality rate, infection rate, but long-term health impacts as well.
Okay, thank you.
Yeah, I see somebody said Minnesota State Fair. I said, yeah, somebody in the chat there. Yeah, that got canceled too. Any mass events, I think during the summertime, it's problematic.
Mm-hmm. All right.
Sorry, that's probably not the answer everybody wanted to hear, but it's the safe play.
This one's, Angela says, I still have a paycheck, but may be laid off in the near future. Should I put the amount of my paycheck that I usually put toward overpayment of debt payments into savings instead?
I would say to her, in that sort of the laundry list, prioritize debts, right? Okay, you're in a good place. You're thinking about this in the right way. Is what are the debts you're paying off? If you're paying off student loans, mortgage, auto, don't worry about that, right? Those are tied to an asset. Pay whatever you need to pay on those. Don't overpay, and try to get your hardships. Where you need the financial flexibility in a crisis down the road will be on your credit card, right? That will give you the opportunity to live and pay for everyday expenses down the road if you have a cash flow problem. So throw money at your credit cards, not at the assets, your mortgage. You're not going to get any immediate return on that investment on the pay down in debt.
Thank you. Well, this has been a wonderful dialogue. Thank you, Michael, for all of your answers on this. Unfortunately, we're not going to be able to get to everyone. We just want to thank you again for joining
Right.
us. And we want to thank again our Alumni Association members and donors for making initiatives like these alumni webinar series possible. If you are interested in learning more about the Alumni Association, please visit us at umnalumni.org/membership. This has been recorded and will be available on our website, so check back if you weren't able to gather all the information. Thank you, everyone, and have a good day.